Continuing from where we stopped in the last class, we stopped at transactional liquidity in the last class. So this class will not be long. In the next 25 minutes we should be out of here, because I told you before, I said what we are basically doing today, this discount and premium, is not very important in our strategy, but I just normally put it there, so yeah, doesn't feel like you are not aware of it, but it's actually not like that important. Okay, now before we go to that, let's just treat the range circle and transaction. Okay, we have done range circle, the transactional liquidity. Now I already gave the template, a bit of it, in the last class, so today we are just like showing it on the chart. So for a transactional liquidity to be, what makes up a transactional liquidity? First of all, it has to do with the change of character in the higher time frame. Now let's take this guy as an example. Let's take this guy broke with the body. This is where he broke with the body. So this guy broke with the body of the candle over here, and this is 4 hours time frame actually. So this is a change of character. Now I said you have to see 3 external break of structure, 3 valid external break of structure, and that 3 valid external has to have the internals in it, 3 internals. So let's just give it this guy number 1, and let's give this guy number 2. And this guy number 3 has multiple internals. This guy number 4, which makes those points a valid range high. Okay, remember when we explained range? This makes this guy a valid range high. Hope you guys can hear me. Okay, yes, makes this guy a valid range high. Then these are previous external points, that's previous strong lows. Why am I calling it previous? It is because once price creates a change of character, the previous, it's no more strong low and weak highs anymore. After a change of character, price has changed to start forming strong highs and weak lows, because the lows are being taken out in a downtrend. So in that course, every previous strong point in the 4 hours time frame are called transactional liquidity. Every previous strong point in the 4 hours time frame. Okay, all of these, let's put it this way, they are all called transactional liquidity until the range low. Now where is the range low? The range low is where I said in the other class, I called it the foundation. So the range low is like the foundation. Let me draw something. If we have like, these are 4 hours, 4 hours, 4 hours, 4 hours, 4 hours, and then we had a change of character. All this guy becomes what? This guy becomes transactional liquidity, TLQ. It's in charge of creating reversals. These reversals you see like this, the continuation reacts from there, because they are previous valid points. So price should have a bit of power there, even if it's not fully Okay, but there should be a reaction from that place, and then we have these reactions. Now after these three breakout structures externally, this becomes our range high. Now the initial, where the breakout structure started from, let's say it started from this point. Now where is price clearing all the traditional liquidity to? It is clearing it to the range, low. Now how is range created? Range and traditional liquidity actually works together. So how is range created now with this traditional liquidity? Because this range low can be created since 2020, and it can take 3 years, 2 years for price to come back after clear. Because before price will clear all this traditional liquidity, don't forget that these things are 4 hours time frame. Before price will clear all of these things, it will take a real lot of time. Okay, sometimes price never comes back to it. Price just creates new range and new traditional liquidity. How? This way, let's say price gets exhausted. The moment price breaks structure, breaks an external, creates change of character, and breaks structure 3 times again. 1, 2, 3. This is the new range low. This has been abandoned, but we are still maintaining this range high. Okay, and now how can price create another new range high? When you hear all-time high, how is all-time high created? For example, this is like the previous high that was created. Let's say in 2024, this was the last high price created, the last range high. Now if price can come to this range high and take it out, it is called the all-time high. Now before price will create another range high again, price has to give a change of character, okay, and then break structure 3 times. But whether price has broken structure 3 times or not, the moment a change of character occurs, the previous strong lows, externals, everything turns to liquidity, turns to TLQ until another change of character occurs. Now in the case whereby this high has not been taken out and price has created this change of character here, but it could not create a new range high, what happens is that they still maintain the previous range high with this range low. Okay, and the moment change of character occurs, this is now transactional liquidity, this is transactional liquidity. As simple as that. Okay, the same thing I was illustrating here. Now price created this guy as the range high, but after a while, what happened? It took out this change of character here. It couldn't even sell for a long time. That's why I said for price to come back to the range low is actually like really difficult. It happens. If it happens, that it is called the completion of the range circle. But it takes a whole lot of time. It sometimes never happens like in years. Okay, instead, that's when you hear that there are all-time highs. All-time highs happens regularly more than all-time low. The time where all-time low would have happened, I think it was the time of Bitcoin. Okay, but it did not. But I think there is an all-time high now. So after the change of character, price broke structure 1, 2, and 3, making these our new range low with no range high yet. Okay, and price kept buying. It changed character, and it was supposed to sell, but it did not. Instead, it did not create any transactional. It did not sweep the transactional liquidity. Instead, what? It took out the high again, and it started buying. Okay, on and on, it kept buying and buying till where we are right now. Alright, so for price to like create a new range, price has to take out the last external low that was created here and then break structure 3 times for us to have a new range high, but we are still maintaining the previous range low. That is on that. Then let us talk about I said I will not want to like waste so much time on this premium and discount. Okay, now let me just put premium and discount in a very simple way that you can understand. When you go to the market, okay, you either buy low and sell high, or you are at loss. Okay, so premium is like selling high, discount is like buying low. Just as this structure is now, it is said that this low is the discount and we have to buy from this point. But the strategy, the way we trade, I think after this particular class, I'm going to just totally remove the premium and discount, because it's not really necessary to me with what I trade. Okay, because sometimes we'll still buy in the premium and it works. Okay, so basically premium and discount is just a concept of people actually stick to it, but I do not. They make sure that anytime they are buying at this level. For example, here we have the 50%, we have this has the 50%, which is the equal level, and then we have this, and then we have the 150, yeah, 0. Okay, and they say buy at discount and sell at premium. It's not really necessary. I don't think I should teach it for now. Let me get to entry first, because if I should, it's just going to like confuse you, the whole theory of entry, because you want to like look for entries here only. So I'll just upload this video as the continuation of the previous class, and discount and premium I'll just put it in line with the entry, but it's not based on premium and discount. You can actually buy following the order flow of internals. Okay, that's why I don't want to say it's just going to confuse you. Alright, it's just going to confuse. There's no need for that. Let me just omit it. So I hope you guys understand the transactional liquidity, because actually that's the only thing remaining right now. Sometimes the market creates two internals in an external, which is invalid. Okay, let me talk about that. Now let us say market creates two internals in an externals. Yeah, it is invalid. If price creates two internals in an externals, it is called a failed external. Either it's called failed external or an incomplete external. That external is not correct, but the two internals are valid to be traded in the order flow, but that particular external is not valid. You are still going to maintain the initial external wherever it is, but that two internals are valid, which means that if price take out those two, you have a disruption. You are going to sell till you get to the recent valid external. Okay, that's failed external. Yeah, so I just saw the question there, that's why I said that I should talk about it. I'm trying to like see. Okay, so we are going to like stop here for today, and till the next class. I think the next class is the entry. Let me check. Yeah, after the question and answer, the next class is the entry. Most important of everything while we are here. Entry and structure is the most important thing. So before the next class, you have to sleep with the structure video. Okay, so we're stopping here for today. Thank you so much.